Right now, let's bring in the CEO and founder, Finance with, is that Finance with Mukhtar?
Yes.
That's, of course, his name, Mukhtar Mohammed, also a capital market analyst. Thank you very much indeed for coming.
Good morning.
Yes. Well, as we have read and heard the president as well, he indicated statistics showed that the economy grew by 1.95% within the first quarter of the year 2018. My question is the growth commensurate with the potentialities of the Nigerian economy?
No. When you look where we're coming from, when they took power, you could say, okay, maybe from a recessed economy to 1.9%, that's okay, that's an improvement. But when you look at where we were before, now, when you look at an economy that was growing about 6.5% per annum, and you look at what is growth now, then you look at an economy that just came out of recession, you look at the economy that the per capita income of the civil servants or the ordinary Nigerian has not gone up, we're still at that lower level of about $2,000 per annum. So it's not looking good, where other countries like South Africa are doing about $5,000 per annum. So we are supposed to be the largest economy in the world. So when it comes to GDP, the fact is that the GDP is growing. But when you look at what is aiding the GDP growth, it has to do with just our oil output is good, oil price is good, other sectors are coming, the non-export sector, non-oil sector, like agriculture is beginning to play a role in the growth of the GDP. But when you talk about real GDP that will affect the ordinary Nigeria, real GDP that's put money in the pocket of Nigeria, I don't think we've done anything better for the past 3 years. Rather, we've seen our earning potentials of Nigeria going down. Because if you look at the time when you have the exchange rate at 150 when they came in, and today exchange rate is at 360. So somebody that used to have, somebody that has 3,000, 150,000 then was $1,000, and now that 150,000 now is not even up to.
So the value of what you have just decreases.
The value have depreciated. So, and when you look at the barometer of measuring the economy, you look at the equity market, you look at the stock market. Remember, for 2 years of this administration, the stock market didn't fail so well. Until last year, it fell a little bit better, and this year it started well, but it's slowed down. It's slowed down now. So when you look at indices,
it's almost really confusing. On the one hand, you say, yes, the economy is looking good. If you look at the stock market, the ERGP, and all of that, all in good shape. And on the other hand, the same areas where you say we're doing well are the areas where you say we're not doing well. When I say you now, as in generally, looking at the economy. But from your standpoint, in the last 3 years, can you really say confidently that this economy is back and on the path of growth?
When you say whether it's back on the path of growth, then you could say, okay, we are going at the path of growth, because if we are coming from a negative now, we are getting into positive realm. That's the path of growth. But when you talk about real growth has to do what affect trickle down to the people. Because if you go to the street and I tell them the economy is growing, they'll tell you
they wonder what you're talking about.
What you're talking about. So it has not trickled down to affect the ordinary Nigerian, the masses themselves, because we're looking at an economy that's talking of growth of 1 point something, and we're talking at the data of unemployment that has been the highest it has ever been before. So you're looking at an economy whereby you're talking of growth, and civil servants in some part of the country and states have not been paid their salary. So when you look at that, what we say, we are having growth in terms of GDP. GDP growth has to do with just your output in terms of your natural resources. And here, what the international community used to base our own national resources is just oil, because we have 70% of our earnings comes from oil, and the price of oil is good, so the GDP will generally go up, and the output, there's relatively peace in the Niger Delta, so we have that. But when you talk about real growth of GDP per capita earning of Nigeria, it has not gone up. So when you look at the economy growing in terms of GDP, yes, but in terms of trickling down, meeting the ordinary Nigerian capital income, meeting people's salary are going up, earning capability is getting better, infrastructure is getting better. We are not yet there. We might be going there because of the economic recovery growth plan, which is at its infant stage, but we've not begun to see those. Sometimes when it comes to economy indices, it doesn't just come up overnight. It takes time before you begin to see those growth. And the economic recovery growth plan is just is not yet even 1 year into its implementation.
All right, Mukhtar. Do you think that if the economy is, the economy will accelerate faster if it's given booster shots like increase in amount of credit extended to the private sector, reduction in reserve ratio, that's deposits in the bank, and then reduction in monetary policy rate, which stands at 14% at the moment. Do you think that if these booster shots are given to the economy, the growth will accelerate faster?
Well, now if you give that booster shock, we may retire, because number one, we're going into an economy, an election year where there's a lot of liquidity in the system. So that is now, when the Monetary Policy Committee, they are looking at two indices. They are looking at reducing inflation, which they are tackling very well. We're coming from inflation of about 19 point something percent, and we're at 12.65%, and they still see that they could still achieve more, that get inflation to single digit. That's why.
Before the year runs out?
Yeah, before the year runs out. When you look at the MPC, the cash reserve ratio, you look at the banking sector. If we don't have that cash reserve ratio, maybe we'll have been in crisis because of the non-performing loans of the bank. Now, when you talk about injecting to the real sector, you're talking about borrowing at 14%. Look, as it stands now, that is not working, because borrowing at 14%, that the banks are borrowing from CBN at 14%. So the bank cannot give you really more than they can give. They will give you higher than that. So that's why you see bank giving up to 20-something%, because they want to make income too. So the MPC are looking at, okay, we want to curtail inflation first before we begin to bring down rates. And the banks are saying, look, there's a cheaper way of making money. Just borrow from CBN and then you loan up. So there's no synergy between the banking sector loaning to the real sector. And if you see the agricultural sector, we are having this boost, is because CBN itself are directly involved in the agricultural sector.
All right, so let's see if you agree with some of the indications given by this government showing that there has been an improvement in the economy. First off, increase in tax revenue to 1.17 trillion in the first quarter of 2018. That's about 51% increase. They're saying this is good?
That's very good for the economy, because finally every economy all over the world, instead of depending on oil alone, we begin to look at that tax earning. That could boost our infrastructure instead of borrowing.
Okay, that's interesting. 2 trillion naira spent on infrastructure in 2016 and 2017 budgets. First in the nation's history.
Good, but incommensurate with the result. When it comes to infrastructure, it depends on what we are seeing. You talk about the second Niger, you're still an infant phase, environmental assess assessment. You're talking about the railway, they are still at the infant stage, they are still doing the environmental impact assessment. So they could say that it's still in the preparatory stage. They are still settling the committees that will be displaced by all this project. So when you look at that, then you say, but in terms of the physical structure being on ground, we are not seeing that yet.
Is there a sense in which policy rigidity has also hindered the growth of our economy?
Yes. When you look at when the government came to be, remember at that time they came in, IMF, World Bank, called on the president that, look, at the rate your reserve was low, oil price was low, devalue the naira, and then bring it down to like, at that time, say the naira to the dollar should come down to like 250 or 230. But the president itself, or the economic team, was rigid. They said, no, we will not devalue the naira. We want the naira. We will make the naira stronger. Yet, we're not doing what will make the naira stronger. We ban a lot of goods. Before you know it, naira to dollar exchange rate went as high as 500 before we started seeing the downward trend. And at the end of the day, CBN have to devalue the naira to 360 in the parallel market and 305 in the government market. So that alone, that rigidity alone, has really affected our economy. If you imagine if we have done it at 250, then would have seen an increment of just maybe some percentage. But now we had over 100% devaluation of our currency.
So place the steady rise in our forex reserve side by side our debt profile that the IMF and the World Bank have been warning us about. Talk about that one.
You see, when you look at that, you look at our gross domestic GDP, and you see, compared to our debt ratio, we're not doing badly at all. It's still good. Even the IMF attesting to that. But what they are saying
about
is
19,
that
20%?
yes, 19 to 20%. But what they are saying that going forward, if you have any shock,
in the global commodity price, for example,
could begin to hamper the payment of those loans. Remember, look, in an economy whereby the government was borrowing as high as, if you look at this, the diaspora bond, I mean, the bond they did in Nigeria for you're looking at government borrowing at 13 to 14% from Nigerians. If you go to the Treasury, they were borrowing as high as 16%, and then the CBN was giving at 14%. Now the government was able to go out and borrow as low as 2%. And what the government did was that they are borrowing to come and service they pay the debts, and so they want to govern it because they felt that most of these companies were not able to carry out any activities and were laying down staffs because they were not able to meet their demand, and government was owing. The government said, let's boost the economy by paying this debt. That they have done well. That's the sense of borrowing was good. And so when you look at that, vice and vice, our earnings in oil, even at that time at a price of about $52 per barrel, we're still doing good. So when you look at that, I mean, the debt to rent ratio is not bad. One commendable thing the government did, where the president announced during the broadcast, was that the government have put in another extra $650 million into the sovereign wealth fund, which is the vehicle that drive investment vehicle that drive any mostly the OPEC nations' economy. So we are beginning to do the right thing in terms of that, using the sovereign wealth fund to grow another stream of income, which could now diversify the economy into other directions. So, but I think that is one welcome measure they have done. So we're looking forward to the government that instead of still maintaining what I call the illegal excess crude account, so why not just move that so-called excess crude account money into the sovereign wealth fund, whereby it will begin to generate and begin to be something that will help the future of Nigeria, mostly the generation yet unborn. All
right. Now, when we talk economy, it's a general term, and we say we have economic problems. These are general terms as well. As an economist, what do you think is a major economic challenge or problem that we have at the moment?
Number one, inconsistency in policy. We don't have continuity in government policy especially. Remember, we have Vision 2020. We are now having the Economic Recovery Growth Plan. So tomorrow, if this administration is not in power, you may have another administration come up with another economic plan. So we don't have consistency. We don't have continuity in government. Actually, what we should have is, if we have a policy in place, and then the new administration comes, what it should be doing is trying to continue that policy or make it better. But what we see here, you throw it away, throw it apart, and now inject more funds trying to create another policy. And by the time you look at 2020, you look at Vision 2020, you look at the Economic Recovery Growth Plan, you look at other plans, you just realize that, look, they are all the same thing, driving towards the same goal, talking the same thing, but in different headings.
And in addition to that, you have this lack of convergence between monetary and fiscal policy, and then the budget that continues to be delayed.
Look, when it comes to budget delay, I've tried to say that the year begins in the first of January of every year. But then it's like every company have its own year end. My year end can be different from your own year end. So can we move our budgetary year end to a particular time that we know we're relatively stable with that time? Then from there we begin to say, okay, can we move it further? Can we move it further? Then we may be able to achieve our target of make sure we move it further. Then we may be able to achieve our target of make sure that our budget starts at January 1st to December 31st. But as it stands now, we don't have the infrastructure on ground, we don't have the system on ground. So we should begin. We should work on that.
And with my experience as a former accountant, some end at June 30th, December 31st.
There you go.
All right.
Thank you very much, Mukhtar Mohammed, CEO, founder, Finance with Mukhtar, talking about the performance of this administration in the last 3 years as far as the economy is concerned. Thank you so much for joining us.
Always a pleasure.
All right, we're still, of course, looking at how far so far. And this time, we'll be looking at the power sector. When was the last time you used your generator? Okay, we'll find out when we come back.
Stay with us.